Good morning, traders. It is Wednesday, 8:02 a.m. Chicago time on the 13th of June, 2018. You'll have to bear with me today. I'm suffering from a severe allergy attack right now. Need to probably mute every once in a while. Sorry about that. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. DAX is the leader today, up 0.23%, but overall, market's stagnant. We're still trading inside of the two-day balance. Yesterday, we missed the high by a tick, and we took out the low by a tick. But overall, the 2 days combined in an MC look like they are very compressed with no consensus. Pretty good price discovery. We're discovering the entire range every day. It's FOMC day today, so the expectation is that the 2 days worth of trading, although on low volume, yesterday's volume was like 35% off or more, actually more like 40% off. The 2 days of volume are likely to dissipate this afternoon. So overall, like I said, a mixed bag. Crude oil is down 35 cents or 0.53%. This morning, one of the things we have to contend with is the fact that we do have FOMC, and we are likely to get choppy. Chop, chop, chop. So, the expectation yesterday, sideways. Scenario 1 lower. Scenario 2 higher. Neither played out. It was scenario I didn't think of. I expected after the double distribution that we would do some discovery up or down, more likely down the way Monday closed. But incorrecto. So we'll move right along to the overnight session. Complete balance, Gaussian. There it is. Complete balance. It's as beautiful as they come as far as a histogram of volume. Market tested 96. Remember, 2800 is just above us, and options expiration, quad witching Friday, is coming up, with 2800 being a major strike. So my overall expectation, as I mentioned in the Convergent aftermarket recap yesterday for the ES, I expect us to head towards 2800 at some point before Friday. Overnight inventory is 100% long, but with the fact that they accomplished a higher high and a higher low, the volume in the overnight session is in line. We are still rolling and going into expiration, so volumes and deltas are all wacky. So what do we glean from this profile this morning? Completely balanced, consolidating, waiting for further news. This morning, I'm going to have to mute you for a second. This morning, the primary scenario, let's make that green, bright green. We are trading right on top of the point of control, the overnight point of control, right in balance. So the expectation, consolidation, open auction in range, total balance, very tight, expecting no OTF action, just like yesterday, until we get to the FOMC release. So this could test the high, come back, expecting it to be non-directional, could test the point of control, come back for both scenarios. But then the FOMC comes in, and scenario 1 is looking for the century figure to be tested, punch through, come back, and then consolidate there. I expect this to go higher from here. Remember, the overall trend, we're one-time framing up on a daily basis. Yesterday was just a poke by a tick, and I'm expecting it to push higher. The secondary scenario is a somewhat benign release from the FOMC. So potential for just a push up and down. And then I'm looking for it to start moving lower, testing what I expected yesterday, the 77 area, and then 74, 75 for a bounce on the close. That's scenario 2. All right. So it's all about the FOMC today. We're gonna just basically wait around for that to come through. We did have PPI this morning. We have crude oil inventories this morning as well at 10:30, but none of that matters as much. This is a pretty poor color, this yellow, this blue. But overall, it's really up or down from here. I know that sounds like, oh, no, duh, wow, this guy's a genius. But we are going to we have been imbalanced. We're likely to move away from this area because we've been in it for 2 days in a row exploring it. Remember, I mean, one thing to note is that yesterday's most accepted price, right? Most accepted price here, the point of control, is right inside of the low volume node. And so it's really built on top of each other. So like I said, the MC for this area, the micro composite, the combined profile, looks very boxy. Very boxy. You see that boxy profile. So it's primed to move away from here, and the expectation is higher, right? And so the expectation for this FOMC, I mean, there's a lot of data that I get before it's released, but you know, regarding what's expected, but the market consensus is they're likely going to go to 1.75% from 1.5, so up 25 basis points on the lower bound. On the upper bound, going to 2% from 1.75. And so it's all about the dot plot and so on. It's a good day to have a news feed, really. And then we have, so that comes out at 2 p.m. Eastern, 1 Central. And then we have Fed Speaker Powell at 2:30. And this will be, I believe, his first, right? I think this is his first, or is it his second press conference. So we'll be paying attention to what he's saying about what the FOMC came up with in terms of how they see the economy currently and how they see it going forward. Okay, so that's where we are. I'll keep it short and sweet. Good luck today, and just it's important to save your bullets until the Fed release comes out. And remember, these announcements generally do this push, pull, and then you get the continuation move in the third pull, right? So if whatever the most recent high or low after the number is taken out, that's the direction we're likely to go. So if it pushes, pulls, and then takes out the high, then we're likely to squeeze higher for some time. If we push and pull and then stall and then take out the low, we're likely to squeeze lower for some time into the session. That's just the nature of it. So the first push is algos, news algos, and then you get the real money coming in and deciding what it wants to do with the data. That's just been my experience. Good luck today, and I'll catch you tomorrow. Take care.